FountainFX on Thursday the 27th of February 2014. The Euro US dollar has finally broken its uptrend. As we can see, we were running this trend line, price was pushing up, we had a push up, pull back, push up, and then this was meant to be a pullback, and it wasn't really much of a pullback, more of a sideways move, showing weakness in the uptrend that it was coming to the end, and now price has pushed down, it's broken the trend line, pushed well below that, it's broken below its previous low, so now we're starting to see weakness in the market. So it would be nice to see a good solid downtrend here. We'd like to see the bears take control and the dollar starting to gain some strength and the euro some weakness, and that would be good to see that pull back down. If we look here, I've identified with this yellow bubble basically that this is the gap that we're looking at, price to pull down into. And just to give you some hints and tips on how you can trade this, if we go into a lower time frame, we can look at the area where price fell from yesterday as a potential area of supply. Therefore you can be looking to place a short order just below this area with a stop above around about 15 points area of a risk. So you could be looking to do that. The alternative is that price is pushing down, and according to the MACD, price momentum is up, but if we go back to the daily, we're looking at the momentum is pushing down here on the daily. So the big picture is saying it's a short, it's a downtrend, which we can see from that, and the shorter time frame, the 60-minute, is saying it's actually an uptrend. So what you can do is you can apply a principle which is called look at placing a sell order just below here, the 136.80, and as you can see, the Europeans have suddenly woken up and price is starting to push down. So I could sit here and place a sell order. I'm going to put in a stop market sell because that's the only way of getting in there before there. So 1.3680. I can put in a sell, say yes. There you go, my sell order's in it. Hopefully it'll get triggered in a minute. Basically to say that when price gets below here, pushes down, I want to pick this up as it goes. So actually I was trying to get it off the bottom of this level here, previous low, so it's pushed up, but you can see there's actually a downward trend happening here. The other way of looking at it is you could put in your trend line now, so that it was an uptrend. When the trend line gets broken, shows that actually that uptrend is no longer in effect and price is starting to weaken. So I've put in a sell order down here. I could then plan to have my stop just above the highs of this area, which is the 136.92. So I can set my stop at 136.95. Which I will do now, 136.95, and I'll put that as a buy stop. Okay, so actually in reality what I've done is I've put in a trade which if price pushes above there first and starts to rally, I'm triggered in a buy order. On the other hand, it pushes below, I'm triggered into a sell order and it pushes down. So that's one way of trading a channel. So I've placed those two orders there. Well, let's see what happens. It looks like price is starting to decline in terms of momentum. So it looks like my short sell order is likely to get triggered first. And it would be good to then see a continuation of this downtrend of the euro against the US dollar. But let's see what happens. Happy trading from FountainFX, and we'll talk to you tomorrow. Thank you.